$3,000. That is the amount that I was able to make on my BrightFunded account. And in today's video, I'm going to show you the trading techniques that I use to realize this result. So make sure to watch the video until the end so you can learn the trading techniques yourself and you can realize this as well. For the sake of transparency, I would like to show you the exact number that we were able to make with this trade, and on your screen you can see that the exact amount was $3,080. Underneath it you can see a screenshot of the MetaTrader where you can see the exact execution where we got in and we got out of this trade. The trade was taken on a 100k live account, risking 1% of the total capital. But for now, let's have a deep dive into the chart and dismantle how we got into this position. Going into the chart, you can see that we are looking at the daily time frame of the New Zealand dollar against the Japanese yen pair. We will start off with establishing a daily bias so that we can determine where price is likely going to draw to. When you take a look at the price action on the daily time frame, you can see that we are clearly bullish. The price is trending higher and bullish discounted PD rates are getting respected. And when you take a look at the most recent price action, you can see that we have dipped down back into this daily fair value gap and that we have taken out a swing low inside of it. But as you should probably know, when you have taken out internal range liquidity in the form of an imbalance, price is likely to seek external range liquidity next. And that is why my eyes went towards these relative equal highs, which is the external range liquidity in this case. And that is also why I was going to look for buys going into the next day. Now that we've established our bullish high time frame bias based on the daily time frame, we need to make sure that our medium term perspective is bullish as well. And that is where time frame alignment comes into play. When we are determining levels on the daily time frame, the 1 hour time frame will give you a structure how those daily levels could be reached. And when you take a look at the price action on the 1 hour time frame, we can see that we had a very nice bump towards the upside coming from the daily FVG. After this high is created, we are trading downwards and we are traded into the bullish 1 hour order block. After the 1 hour order block was reached, we got a push towards the upside, breaking structure right over here. That break of structure is crucial because that means that our medium term perspective is now aligned with our high time frame perspective. They are both bullish. After the break of structure, we got a dip into this internal range liquidity. And as you know, when internal range liquidity is taken and we are looking for intraday buys, we are looking for the external range liquidity on the 1 hour time frame. And that is why we were going to look for buys for this intraday session. Now that we've determined that our medium-term perspective is in line with our high time frame bias, we can go into the short-term perspective and seek a market maker buy model to look for intraday buys. And again, you should take time frame alignment into consideration in this case. We have determined our levels on the 1 hour time frame for the medium term perspective. So when we are going into the short term perspective, you should take a look at the 5-minute time frame to get into a market maker buy model in this case. And when you take a look at the chart, you can see that we indeed have a market maker buy model. We have the original consolidation right over here. We are going into the sell side of the curve, having the accumulation right over here. We dipped into the 1 hour FEG and we went into the buy side of the curve, afterwards reaching our target of the 1 hour time frame. But how does everything play out when you take a look at each individual session? I am only trading the London session and the New York session, so those will be the kill zones that I will be covering in this video. So, as you most probably know, when you're looking for buys, you would like to buy below the New York midnight open price. And when the New York midnight open price was established right over here, we can see that we had an immediate dip down. When the London kill zone started at 2 a.m. in the morning, we went into an accumulation period. Later on into the session, we got an immediate dip down into the 1 hour FVG that I've shown you before. We had the London manipulation occur. We created this low, and afterwards we got a rally towards the upside during the London session itself. The bearish PD arrays right over here got disrespected, and that made me confident that we were going to look for higher prices. So when we are going into this 5-minute FVG, I got into buys as well. Now that we are into the buy side of the curve for the market maker buy model, bullish PD arrays should get respected. We got into buys at this low risk buy area of the 5-minute FVG. We got the push higher and we went into an accumulation period. As you can see, this 5-minute FVG acted as support. Going into the New York kill zone, we got a push higher as well, and into the New York session, we got a dip below into a discounted PD array in the form of this 5-minute order block. Afterwards, we got a bounce higher, getting above New York midnight open price. We got a dip into this 5-minute order block again as well, and afterwards, we had a news injection which pushed our price towards the external range liquidity, which was our target NTP in this case. And that brings us to the end of the video. If you have any questions, make sure to leave them in the comments below and I will try to help you out. If you liked the video, make sure to leave a like, and if you want to see more content, make sure to subscribe. But for now, I wish you a nice rest of your day.